I've put together a retirement income portfolio with the objectives of a yield of 4% a year, and ideally growing by 3% each year over time. It should have 3% capital growth so that the underlying portfolio isn't eroded by inflation over the longer term. It should therefore be a set and forget portfolio, so you really don't do much other than collect the dividends. And I review the portfolio every quarter, so ideally I want dividends also paid on a quarterly or monthly basis. So join me on this journey of putting together a retirement income portfolio. I'm Ian Shadrack, a qualified accountant with over 30 years experience. I help people build robust retirement portfolios. It's a fund portfolio consisting mainly of equities because bonds generally have no inflation protection on either the capital or income side of things. And investment trusts have the potential to build up capital reserves such that they can maintain dividend payments during hard times. And within investment trusts, there are some dividend heroes that have increased their dividends for the last 20 or more years, although often those increases have not kept pace with inflation. So there's an excellent website, the aic.co.uk, the Association of Investment Companies, that has a database of investment trusts, and you can query that database, look at things like different sectors, and then you can pull out things like the dividend yield of these investment trusts and also the 5-year dividend growth. So you can see quite quickly what sorts of investment trusts are likely to meet my objectives. Ideally, with a retirement income portfolio, it would be possible to find some popular exchange traded funds that have a high yield and that could probably meet our investment objectives. And here's the Vanguard All World High Dividend Yield ETF. And the problem with this is that it has 2,000 stocks within it, which is just far too many. The associated yield is about 3.5%, so that's below our 4% target, even though it's quite a well-diversified fund. Some of the top 10 holdings here look pretty good. PE ratio is only 15, so it's just a shame that high dividends for Vanguard aren't really high enough. As I get older, I would like a greater margin of safety from my investments, but I feel that value on its own is not good enough. You need a dividend yield behind the companies you're investing in that you can be paid to be patient. JP Morgan China growth and income might be an example where being patient can work to our advantage. When we look at the chart, it's had quite a roller coaster ride, and it looks like the peak in early 2021 was simply too good to be true, and now prices have crashed back down to pretty much where they were like 10 years ago. So this fund is going to pay out 4% of net asset value each year. So ideally we can collect some sort of dividend income while we're waiting for the fortunes of China to improve. And the Chinese government have just announced that they will be taking actions to halt the Chinese recession and to stabilize some of the excessive debts within the Chinese property sector. And this has led the Chinese stock market to recover, and some of the Chinese investment trusts, where they're trading at a discount to net asset value, have seen a strong rebound in recent days. And this could be the start of more of a recovery in Chinese funds. But even if it doesn't happen, at least with this one, we're going to collect a dividend while we're waiting, and we're going to be able to diversify our portfolio into emerging markets. So here is the passive income portfolio that I put together. It's a series of ETFs, nominal £30,000 spread equally across these. The current dividend yield is 6%. And in the first quarter that I monitored the performance, I got both capital growth and a fairly decent dividend yield. And then in the second quarter just ended, we got some even more capital growth and again a fairly stable, solid yield. So I'm pretty happy with the overall performance of what's going on. The best performer was the iShares UK Dividend ETF, IUKD. Another one that's done well is the X-Trackers Global Select Dividend 100, which has a whopping yield of 7%, and it's also produced capital growth at the same time, which is quite surprising. We seem to have got lucky there. For bonds, I've gone for the Invesco High Yield Corporate Bond Fund that's hedged to GBP, and it's largely that hedging that has meant it has also delivered capital growth as well as fairly chunky dividends. We've got emerging markets dividend that might be interesting to watch going forwards, and we've got a European quality dividend ETF that unfortunately has declined in capital value, but I still think that the long-term prospects of that ETF are decent. So I'm not going to make any changes to the portfolio, and I'm going to carry on watching it and just see how it does quarter on quarter. For the active portfolio that I've selected, again, we've seen capital growth in the first quarter that I monitored the performance, and then also the quarter just ended. Not quite so stable dividends because some of these have payments that are more weighted towards the end of their financial year, but we've got income in both quarters that's fairly decent. Merchants Trust has been the top performer amongst these. There have been a few disappointing funds such as this Janus Henderson Asian Dividend Income. We've got an overall yield of nearly 5.7% with all the individual yields here. And the top yield performer is the Schroeder Global Dividend Maximizer. This uses call options to enhance the income of the fund, and these options are a bit risky. You need to read quite carefully what exactly is going on, but it can be useful if you'd rather have income than capital growth. So here I've got a watch list of funds that I'm going to also monitor, but they're not within any model portfolios. So I've got HICL Infrastructure, which is a large and well-regarded infrastructure fund. JP Morgan Global Growth and Income. In the quarter just ended, it had capital decline of about 6%, but the long-term stats behind it are pretty awesome. We've got the Invesco Global Equity Income Trust, IGET, which is an interesting investment trust. It's recently had a bit of a reorganization, and it's looking to pay out 4% on a fairly robust investment portfolio. So it's quite similar to things like Murray International and then also the Henderson International Income Trust. And then with some recent developments in China, I'm also going to start to look at JP Morgan China Growth and Income. Here are the top performing bond ETFs over the last 3 months, and they all have one thing in common. They all have currency hedging, which you can see from the fund name. So over the last 3 months, the pound has strengthened by about 5% against the US dollar. However, the longer term trend of the pound dollar exchange rate is down, and so often for longer periods of time, you're probably better off not hedging your currency exposure. Two of the top performers in the retirement income portfolio have come from the UK, being the UK Dividend ETF IUKD and the investment trust Merchants Trust, and they've both done reasonably well, and it's showing that it's really more down to the sector exposure that they've got rather than maybe active versus passive. One fund to watch is JP Morgan Global Equity Premium Income ETF. The ticker is JEPG. And with this fund, you get an active, diversified equity portfolio that's leveraging research analysts and what JP Morgan claim is a 30-year proprietary process to find attractive stocks. Then they're looking for an innovative source of income, which is through selling call options each week to adapt to changing market conditions. So this could work quite well. I think in extreme bear markets, it's unlikely to work very well at all and could actually add excess risk, but it's worthwhile looking to see how this performs through a stock market cycle, and then we can see whether we want to add it to our portfolio. Here's some data on the dividend history of the fund. The underlying dividends are US dollars, but you actually get income in sterling. And we've also got the top 10 holdings. The fees of this fund are 0.35%. If you're interested in learning more, sign up for my newsletter via my website and you'll get all my latest research. I also help people to put together retirement portfolios through my portfolio coaching service.